One goes by the notes what we got from Infosys on the JP Morgan conference, it really appears that for IT companies, the demand environment, in fact, if at all, is getting better. Uh, but Aisha, the point with large cap IT companies is that how much more headroom is left for IT companies? Can they give you the same kind of a return what we've got in last 1 year of 40-50%? That looks slightly stretched. Uh, that may not be the expected return for some of the IT companies. Now, for large cap IT companies, there are two factors at play: one buyback and one demand, and second buyback. So, if TCS has announced a buyback, I expect other IT companies also to announce a buyback. So that, in a sense, could keep, let's say, the companies where the buyback has not come out, they could be buzzing largely because of on this hope and assumption that look, a buyback post TCS will come from Infosys and other IT companies. That's one. B, I think more than IT services, which in a sense is already re-rated and could give double-digit returns or mid-teen returns. That's fantastic if you're a conservative investor in this kind of a market. 10-12% return after a 50% run up in last 1 year, I think is a great return. But the real re-rating, I think, has happened in the IT product space. These small and very niche companies, starting from an OnMobile to a Tejas, you can throw in a Root Mobile. That's where I think a lot of re-rating has happened. So real multi-bagger in last 1 year has come in that space. And now you got this new age pockets which are getting constructed. Those are not IT companies, but I would say internet and .com. So you got a Nazara which has got public, Matrimony is there. Later in the year it could be Zomato, it could be delivery. So for me that is a more meaty part. You may call it IT, but it's actually platform and e-commerce. Then you got large IT services companies, which by and large is fully valued, but you will see some big moves depending on the numbers. For example, Birlasoft came out with numbers, the stock got re-rated. So the IT space can be divided into three: large cap IT companies where you may at best get single digit or early double digit returns. Mid-cap IT stocks, which some of them are cheap, they may get slightly more expanded in terms of P multiple. IT product companies, which is the interesting space but very niche, and then the entire mid-cap ITs, then the entire internet space where new listings and excitement and all the P multiples and all the valuations are just getting re-rated.